Have you thought about buying a foreclosed home? Are foreclosures even a good idea? That's what we're going to talk about today. Hi, I'm Jen Sylvester with RE/MAX Spectrum here in Plymouth, Massachusetts. And today we're talking about foreclosures. With the current real estate market being so competitive, a lot of buyers are looking outside the box and looking for other avenues for purchasing a home. One of those avenues are foreclosures. Now, what are foreclosures? When a homeowner is late on their mortgage payments, the bank will eventually start the foreclosure process. During that process, they'll try to reach out to the homeowner, they'll send them letters, they'll offer to try to find a resolution to keep that homeowner in the home. But oftentimes that doesn't happen, so they have to proceed with the process. If a resolution isn't found with the bank and the homeowner, the bank proceeds with scheduling the auction. The auction is the final process of having the bank take over the ownership of the property. Sometimes during this process, a homeowner will know if they're not going to be able to make amends with the bank, and they'll move out before the auction takes place. But oftentimes, the homeowner's still in the property when the foreclosure happens. And when the bank takes over the ownership of that property, they're taking over ownership with the homeowner now becoming a tenant in the property. Now, there are foreclosed homes, there are also pre-foreclosed homes and short sales. Pre-foreclosed homes are basically properties that are in the process of being foreclosed. Often these properties are listed on websites as pre-foreclosure properties when in fact they're just properties that are in the process of trying to work with the bank during the foreclosure process. These properties cannot be purchased directly from the bank until the bank takes ownership after the auction process. Now, a short sale is when a homeowner wants to sell a property, but they owe more than what the property value is. Now, with the increased values these days, we don't see too many short sales, but back in 2006, 2007, when the market crashed, we saw an abundance of those short sales because people were upside down in the mortgages. What that basically means is that the homeowner then gets an offer on the property and goes and negotiates with the bank to ask the bank to forgive the difference. They owe a certain amount, the value of the property is lower than what they owe, and they ask the bank to forgive that difference to let them off the hook so they can walk away and not have it negatively affect their credit. Now, we will likely see an increase in foreclosure activity over the next 12 months due to people coming out of the forbearance process. Approximately 15% of homeowners that are in the forbearance process now that will eventually end, unfortunately won't be able to hold on to that property and will be forced into a foreclosure situation. Are foreclosed properties a good investment? There's a lot of appeal to foreclosure properties because they'll often sell for below market value. But there are a few things that you need to take in consideration when you're looking at these foreclosed properties. Foreclosures can be very appealing because they can often sell for less than market value. But there are definitely things that you need to take into consideration to kind of weigh out whether this is a good investment for you as a home buyer. The first thing to consider is the reason why the property was foreclosed to begin with. Properties are foreclosed because homeowners can't make the mortgage payments. If they can't make their mortgage payments, they can't upkeep the house and take care of necessary maintenance and repairs. When a homeowner can't take care of those regular maintenance items, then the home falls into disrepair. And the disrepair might be minor with cosmetic painting, rotted trim, but it also could be major, leaking roofs, leaking basements, and even worse. Another important note is that when these banks take these properties back, the first thing they do is they hire a real estate agent to come in, look at the property, and assess the value. Their goal is to get top dollar. They want to be able to cover the mortgage on the property and then some. If the mortgage happens to be very low and there's a gap between the mortgage amount and the fair market value, they're going to capitalize on that. Banks are a business. It's not just about covering the mortgage. They're going to try to walk away with as much money as they possibly can. The asset managers from the bank that are handling these files will actually get bonuses if that gap is large enough. So you can bet that that dollar value is not going to be a bargain per se, because they're going to try to push that envelope to get as much money as they can out of that property. What this means is that if you have a property that is normally a $400,000 property and it needs $50,000 worth of work, then the bank is going to try to get $350,000 or more for that property to close the gap. And what that means at the end of the day, you take a $350,000 property, you sink $50,000 in, you have a $400,000 property when you could have just bought a property that already is repaired for the same amount of money. Now, if you're a contractor and you can make that $50,000 repair for less, then that's where foreclosures become an incredible opportunity. So the next question is how do you buy a foreclosed home? Well, there's a couple different ways to buy foreclosed properties. Well, the first option is to buy it directly at the bank auction at the end of the foreclosure process. The bank auctions are public to anyone. They post it, advertise it as a public auction. Anyone can walk up with a check to buy the property at the auction, but there are definitely things that you need to be aware of going into that auction. The first thing is that you cannot, in most cases, cannot inspect the interior of that property. You're buying it sight unseen as is. If during the auction the property is occupied, then you will be required to buy that property with the occupants in place. That obviously could come with a whole host of issues, with evicting those occupants and dealing with whatever mess they make of the property after they leave. The other issue, obviously, is without getting into the property, there is no way to gauge to the full extent and how much damage exists in the property. Now, after the auction takes place and the bank takes possession of the property, they assign it to a real estate agent. Now, that real estate agent will go in, and I've had plenty of experience doing this myself firsthand. The bank will call me. They will have me knock on the door. Sometimes I have to evict homeowners. Sometimes if the property is empty, I have to inspect the property. And essentially my job is to get the house ready for sale, determine what the property value is, and then get it ready for sale, which means cleaning out the property, most of the time cleaning out the property. Sometimes there are situations where banks will sell it as is with all the stuff that's in it. But in the banks that I was working with always cleaned out the property so that we can get all that stuff out so that the new buyers can take possession of the property with it completely empty. And then assess the situation to see, what kinds of things may need to be done, winterizing it for the property, making sure that there's no safety issues, at the property while we get it ready for sale. Now, the timeline for this varies. And I've had that question a lot. If someone sees a property that's about to go to auction, when will it come on the market? It could be 2 weeks. It could be 12 months. I have had situations where a property is foreclosed and then it takes 6 months for the bank to work through all the legal issues until they're finally able to go and sell that property. Now, once the property is officially listed in MLS, then a buyer can go in and inspect the property. They can go in, walk through, bring a contractor, assess the property, take a look at what kind of damage and what kind of condition the property is in. A few things to look out for when you're doing this is that all of the inspections are usually on the buyer, including Title V. Now, Title V in the state of Massachusetts relates to the septic system and inspecting a private septic system. Massachusetts does require that all septic systems be inspected within and pass a Title V inspection, be brought up to code within 2 years after a deed transfer. When you get a mortgage, the mortgage company takes it a step further. They will require that the property is brought up to code at the time of the sale. Now, to do that, when in a bank-owned situation, most of the time, very often, that falls back on the buyer. Now, a Title V inspection, depending on your area, anywhere between $400, $500, $600, but a septic repair can be anywhere from $5,000 to $25,000 for the repair, depending on what it needs. Now, a contractor going in or an investor going in that's paying cash doesn't have to deal with the lender. They don't have to deal with the Title V regulations at that point in time. They can purchase the property, do the septic system after they take possession of the property. There are fewer barriers, obviously, when you're buying cash, but you don't have to buy a foreclosed property with cash. There are other options. Now, the low down payment programs, the 3.5% FHA programs or 5% conventional programs, have strict guidelines or strict rules on the overall condition of the property. If the septic system fails, they will not give the loan. If the property is in disrepair, significant disrepair, kitchen cabinets are falling off, windows broken, that sort of thing, they won't approve the loan. But there are other options. There is a loan, a rehab loan called the 203K loan that is offered as an FHA loan, which means that particular loan is a lower down payment, 3.5% down payment. But what happens is the loan is structured so you can roll in the cost of the repairs into the loan. So for example, if the loan amount is $300,000 and the total cost of the repairs are going to be dictated by FHA on what is required to bring that property up to FHA standard, and say it needs $50,000 worth of work, they will write a loan for $350,000, providing that $50,000 goes directly towards making those repairs. Now, typically the interest rates on the FHA 203K loans are a little bit higher. So typically what people will do is you'll get the home repaired, go through all the necessary steps, and then afterwards refinance into a conventional loan. At that point, the property is repaired, will qualify for regular conventional loan, and then you can refinance out of the 203K loan. So a few of the things that you should consider when you're thinking about buying a foreclosed home. One is to overestimate the cost of the repairs. Typically, you should estimate 1.5 to 2 times for the cost. So for example, if the cost you think to repair the home is $10,000, then I would make sure that you have at least $15,000 to $20,000 going into that home. There will always be hidden repairs with a foreclosed home. These homes sometimes are sitting vacant for 2, 6, 8, 10, 12 months or longer. And typically homes do not do well when they're vacant. Walls crack, they shrink. If the plumbing was not winterized properly, you could have cracks in the plumbing system and not even know about it until you start using the property, firing up that heating system. And then at that point, it's after the closing and you're stuck with having to replumb the entire home. The other thing is unexpected cost with the bank. You should ask the bank to make sure that they're covering any outstanding liens, betterments, taxes at the closing. A lot of the banks will, but not all of them do. Not all of them will cover those expenses, and they'll sell the property as is with the buyer assuming those costs at closing. And the last thing you want is to show up at the closing and have an unexpected bill of $5,000 that you have to come up with. The bottom line is that foreclosed properties can be a great investment for the right buyer. They're not going to be a fit for every single buyer, and it's important that you weigh out all of the considerations. Have a good long talk with your lender and your real estate agent to see if this is even an opportunity, something worth exploring. And make sure that you understand going into this foreclosed property that is exactly what you're expecting, so there aren't any surprises. If you're a contractor, if you're an investor, or if you have cash to be able to cover repairs, foreclosed homes can be an excellent opportunity to build up equity in the home. If you have any questions on the foreclosure process, don't hesitate to reach out. I'm happy to help.